Hey guys, welcome back to another video. In today's video, we are going to go over something called smart money concepts, but more specifically into the subtopic of this type of trading, order blocks. Now, if you look around YouTube, there are a lot of videos about order blocks and how to spot order blocks that are valid, how to spot order blocks that are not valid, and which order blocks to trade from, which order blocks not to trade from. So what this video is going to go over is very specifically what an order block is, how you can spot one, and how you can spot whether it is a valid order block to trade from and if it is not a valid order block to trade from. So what are order blocks? So a simple way of putting it is an order block is a footprint left behind on charts that represents an institutional order, hence order block. So these order blocks are found near enough everywhere on the chart, and what we're going to be doing today is, in this short video, is to basically break down what is a valid order block and what is not a valid order block, and how to spot these very easily. Now, once you learn how to spot these, it will be almost muscle memory, if that makes sense, for your eyes, and you'll be able to spot them very quickly, which is what I'd like you to be able to do going forward with this style of trading. A more clear description of what an order block is will be something along the lines of: it is the candle before an impulsive move that leaves behind an inefficiency. Okay, so what do I mean by an impulsive move? An impulsive move is something like this, okay, where you can see that price is moving clearly in one direction. Okay, so something like this would be known as a correctional move, and this would be an impulsive move. So it is the candle before an impulsive move, and generally before an impulsive candle. So you can see this is an impulsive candle, right? And this therefore would be our order block, okay? And it leaves behind an inefficiency. So an inefficiency is, very shortly put, where there's only buyers in the market, and it can be measured via something like this. So we want to get the order block. So if I just mark out the order block like this, let's put down POI, okay, then it is the gap between this candle's wick to the next candle. So it will be here. So if I move that and I show you it as this, so here and there, so that's what's an inefficiency, right? And as we can see, we only have sellers at this point. So within this point here, we only have sellers, okay? And what price will do is it will come back and it will come back and fill this inefficiency. So we can expect in the near future, price will come and it will fill this inefficiency. Now if we look left, can we see an order block? So an order block is the candle before an impulsive move, okay, that leaves behind an inefficiency. So over here, this candle here would be our order block, okay, impulsive move that leaves behind an inefficiency. So let's mark out this inefficiency over here. It'll be here to there, move to the left, the price comes back and fills it, then obviously taps into this order block, and then you would have been taking sells. So that's it. We've covered the main thing, well, the main description of what an order block is. It is a candle before an impulsive move that leaves behind an inefficiency, and that's what tells us what a valid order block is compared to an order block that is not valid. Okay, so let's find an example very quickly of an order block that is not valid. So you could go something like this. So candle before an impulsive move, I'm going to call that an impulsive move. Actually no, let's go here. This one's a bit better, right? So a candle before an impulsive move, so here's your impulsive move that leaves behind an inefficiency. So here we don't have an inefficiency, right? So from here to here, there's no inefficiency. This candle's wicked up and it's covered it, so there's no inefficiency there, not like how we have one here. Okay, if we can spot that there. So order block, impulsive move, here's an inefficiency, but over here we don't, and so as we can see, price comes up and it doesn't really respect it, which is something that we can see doesn't really respect it. Okay, now that's what I wanted to go over very quickly in this video, is what's an order block and how can you spot it. So this would be a valid order block. You know, this one here was a valid order block. This one here is also a valid order block. Okay, and in this case it didn't work. But we don't take trades just from order blocks. Okay, we need other confluences as well that we will go over in future videos. So I hope this video is informative. It's basically told you what an order block is. I can take a trade from an order block, and essentially that is all I wanted to go over for this video. But if you want to see what sort of opportunities order block trading can give you, it's this. So it'll be something like this. So here's your order block, put it to the left. We can see price is trending down. You have nice bearish structure. So we'd take a trade like this. Our stop loss will be very tight, so we'll be around here. Then we're going to add a couple pips for spread. And what order block trading essentially comprises of is, if price violates that order block, then your trade is invalid. So you leave, let's say, okay, what is that? That's a 35. Let's add 2 pips, whatever this is. Let's make it 40. Let's just make it a nice round number, roughly 40. Okay, and what it does is it lets you have nice risk to reward trades. So it gives you that risk to reward which can help any trading strategy out significantly. So that's order block trading. I hope you found this video very useful. Give it a like, subscribe to my channel for more, and I'll be going over and breaking down more smart money concepts in future videos.